Well, my next guest's $5 billion real estate empire just got bigger. Thor Equities has acquired 4 more buildings on New York's Fifth Avenue with plans to develop a new complex of hotel, apartment, office, and retail space. Now, Thor owns and manages property all over the world, and CEO Joseph Sitt joins me now. Joe, great to have you here.
Thank you. Glad
So tell us a bit about these new properties you've acquired.
All of them key marquee locations on Fifth Avenue, corners. It'll actually be now our 9th building that we'll be up to owning on New York City's Fifth Avenue.
Really?
Which is very, very exciting.
And you say that makes you the largest landowner in Fifth Avenue right now, right?
We would
Landlord.
be the largest owner of buildings on Fifth Avenue now. We're blessed.
Not a bad avenue to be a dominant on, but why Fifth Avenue? Tell me.
Well, first of all, it's first mostly a New York City story, Fifth Avenue being the heart of New York City. And 3 things about New York that have made it the tale of 2 cities, stronger provider, stronger market compared to the rest of the United States of America. One, well, I should say first, the first 2 initiatives were really driven by Mayor Mike Bloomberg, who happens to be obviously the owner of this network.
Of this company, yes.
One is tourism, the focus of New York City, bringing the global tourists, going after the emerging market consumer, whether it's Brazilians, Indians, Colombians, Chinese.
Okay.
And that's something that's going to grow stronger. That's what we're investing in. You look at London, which normally leads New York City. In London now, the Chinese represent 27% of the purchases on Bond Street, as an example, which is a mind-boggling shift for a consumer that didn't exist 10 years ago. And that wave is making its way to New York City and to Fifth Avenue. And then second New York City story, again, a Mayor Mike story, is technology. I think our city had the good leadership to foresee potential bump along the way in the financial markets and really put a big focus on recruiting media and media tech and venture capital tech to come here as opposed to, let's say, San Francisco and Seattle. And you see 2 great examples of both industry making diametric changes in neighborhoods here in New York. One is Google, making that multi-billion-dollar investment is going to turn around Chelsea in that marketplace with tech businesses that'll open around it. And then second, media, Condé Nast now that's going to make the move to Wall Street.
Right.
That's going to, again, change things. So I would say that overlying New York, and then more specifically to Fifth Avenue, it's where people want to build their superstores. If you're Victoria's Secret, if you're Zara, if you're Uniqlo, if you're H&M, you want that brand presence. Is the internet hurting? Yes, but you need to have that brand presence to sell the internet.
You still need the brick and mortar, basically, to get those into your, obviously, into your brand and into your store. So you're seeing retail. You want retailers, obviously, and anchor retailers in these properties, but you want them on the streets versus, let's say, in the malls, right?
Well, my theory on malls, forgive me, I feel like, people have been talking about the internet and its effect in the malls. I think we finally hit the eye of the storm and nobody realized. I think that malls are going to suffer tremendously across the United States. I look at companies, a lot of malls that I just think are unexciting, kiosk venues that aren't exciting, they're not merchandised right, and even the retailers inside of them that aren't adjusting. I look at a company like Best Buy. Forgive me, I look at Best Buy as really a showroom for Amazon. People go into Best Buy, take a look in the mall at what they like and see, and then they go home, buy it on Amazon for a few dollars cheaper delivered to their house. So I think that's another diametric change in the marketplace.
You hear people say that, by the way, about Barnes & Nobles and Borders before, it's just a place that people then just bought their books online on Amazon. But does that, when you say that to me, though, when we had sales figures coming out from Black Friday weekend, I mean, mall traffic appeared to be up, and it seemed like, that the traffic was good, though.
I think that overall retail sales, which is the bigger thing that they're able to track, they have a harder time sometimes isolating whether it came always from an internet sale or whether from the actual store. I think whenever dust settles that the internet is going to make a dramatic impact on the marketplace, and part of that shift that's going to drive and make the Fifth Avenue stronger is, as you started to allude to before, for all those powerful retail chains and superstores that want the marquee brand locations like the Louis Vuittons, building maisons, as they call them, these big retail concepts. They're going to want to have those flagships on the high streets. That'll also drive their internet business as well as create incredible sales on a street like Fifth Avenue here in New York.
But in your view, then, that sounds as if the metropolitan areas will continue to do well property-wise, and it's really Middle America that's going to continue to suffer. That's what it sounds like.
Very much so. I feel badly when I see it, but it's going to continue. Markets like San Francisco, because their own metrics of both media, tech, and international tourism, as example, will perform better. A Chicago will perform better. A South Beach, people talk about the pain in Miami and pain in Florida. South Beach is turning around and turning around quickly, condo sales, because the international market, the Brazilians, the Latin Americans, and New York the same. The heartland of America, I hate to say it, we're going to continue to see a lot of pain out there.
Okay, Joe, thank you so much. Great to see you again.